because we've been in a strong market, there's going to be a lot of traders who are going to continuously look for the bounce when the bounce is not coming. Now, I'm not personally trying to say that, that's the end of the bull market and we're going down. But what I'm saying is we could be looking at a short-term rest period. So trading over the next, few days, this week, especially next week, could be a little bit difficult just due to the fact that I can see, right, just based on this chart, looking at the last 2 days being down, we're due for a dead cat bounce, right? So notice, the downwards pressure and then a dead cat bounce. Notice the downwards pressure and a dead cat bounce. Notice the downwards pressure. We're looking for a dead cat bounce, but the overall trend is going down. Now, when the bulls decide to step in and either save the chart and save the day and continue to ride higher, I don't know, right? So that's why trading is going to be a little bit more difficult. Again, there was a beautiful 20 SMA play to kind of open the day, and then that's essentially been it, right? So if you kind of missed it, then you're kind of continuously either chasing the short or you're looking for those bounce opportunities, which I did today and got my ass handed to me in giving away all of my profits from the early short. So you have to kind of take the price action for what it is. And if I go to the daily chart, right, the daily chart, this is the first back test of the linear regression. So we broke out of this channel. Okay, we broke out of this channel on the 15th and it's currently the 30th. So we're talking about 2 weeks worth of trading where we have not back tested the original breakout spot. Okay, so prior to breaking out on the 15th, okay, we had 1, 2, 3, 4, 5, 6, 7 trading days of distribution where the ranges really contracted. Price action didn't really do anything. You guys can maybe, if memories are serve you correctly, think back to a couple of weeks ago when the price action was extremely choppy, where it really wasn't going up, it wasn't going down, it was kind of hard to find trades. Okay, that time, that was distribution. But when we broke out, it was that, hot air balloon letting out all the gas, right? So once the gas was released, you've seen the ranges started to expand. We started to move higher. Even on the pullbacks, it was just very short-lived, right? Market would pull back. You can buy those dips off of rising demand and continue with the longs. Now we've kind of put in this blow off top here on the 23rd, and that's exactly where we're coming down and testing those lows. So that blow off top, right, on the daily chart from the 23rd is now being back tested, which is correlating with the linear regression on the daily. However, also correlating, right, go all the way back to March, right? March and April, look at this long period of chop and distribution during March and April. Okay, you see this? So all this price action here is now being back tested. Healthy, 100%, right? Anytime you bottom out, like we bottomed out here on the 19th of April or May or whatever the hell it was, 419, as soon as we bottomed out, we started this magnificent rally. Okay, so now, again, even though I'm a day trader, I'm a scalper, I don't really care what's going on the big time frames. But when market cycles and environments start to shift and it starts to change, now we have to kind of see what's going on macro wise, what's going on the daily chart. Okay, because now we get out of the routine of, hey, we can just buy the dip, we can just play through overnight highs, we can just buy those first hour highs. All the 20 plays long are going to obviously work. We have to kind of alter what we're doing when the market conditions change a little bit. Now, being that this is the first test of the linear regression, if the bulls successfully hold this today and we get a nice push tomorrow, reclaiming the 5-day moving average and reclaiming today's highs to end the week tomorrow, bullish. I will be 100% long-sided going into next week. Now, let's say, for example, there's a scenario where In the overnight session and the pre-market session, we really are pushing higher, up 100 points, up 150 points. Market open happens, we get a big surge, and then price starts to get rejected, okay? And it doesn't hold today's highs, and it starts to fall down, and we lose this linear regression. Well, we're going to come back. I don't care what anyone says. We are going to come back and test 18,500. It is what it is. That's the 20-day moving average. The 20-day moving average on the daily time frame has not been tested since reclaiming it on the 3rd of this month. So we've been trading over the 20-day moving average, okay? And we could be potentially backtesting the 20-day moving average the first time this month. Now, if this was a 5-minute chart, okay, I want you guys to really take a second and look at this daily chart that I'm showing on the screen. Whoops. If we look at the 3rd of this month, when we closed over the 20-day moving average, imagine that this was a 5-minute time frame. What would we be looking for? Okay, what would we be looking for? A following day or a following candle, right? This is a 5-minute chart we're imagining. We are looking for a following candle to confirm, and we're using the previous day low as a stop, which is the reason why. Okay, this trade is working out fantastically as far as a daily 20 SMA play. So anyone, let's just say this, the majority of stocks, and I'm not going to say all of them, but the majority, a good handful, the basket of better names, since the 3rd in the Nasdaq 100, you could have probably put on swing trades and made some money over the past 3 weeks. Would we all agree on that? Okay. Now, if this was a 5-minute time frame, and we're kind of putting in this blow off top and we're pulling back a little bit, well, guess what happened? Yesterday, we lost our 5-day moving average on the daily time frame. But if this was a 5-minute chart and this was our, our little scalp play that we like to take here intraday, well, then don't you think that the power trend has been broken, right? It was broken on the 29th. It was also broken on the 23rd. Okay. So now that we've broken the power trend, market conditions are starting to change. If I was in this active 20 SMA play on a 5-minute time frame, don't you think it might be time to start taking some profits, right? If the range was 330 points back when we closed over the 20 SMA on the 3rd, 330 points, and that high price was sitting at 18,050, and we are trading at 19,023, the highs, we are talking about almost 1,000-point move. That's a 3-to-1. If we risk 330 points on this Nasdaq 100 chart based on the daily, and it was a swing trade, right? Theoretically speaking here, we made 3-to-1 on our investment. That's a hell of a trade. So because price action is starting to pull back now, it's making things a little difficult. Now, if you do not, right? If you do not, I want to paint another scenario here. If you do not analyze the chart that way, and you just simply do something like this, right? But you need to really identify, who you are as a trader, okay? Who you are as a trader. Now I'm changing this chart to just a 20 SMA on a 5-minute time frame. If you do not know anything that's going on macro-wise, and you're not concerned about it, and you're someone who wants to come into the market and take the 20 SMA plays and take scalps for what they are, scalps. Remember, a scalper is someone who's looking to catch momentum shifts or continuations, and it doesn't matter if the market's going up or going down, right? They're going to take their losses. Their risk management's going to be extremely tight, right? Because it's a mechanical system, and it doesn't matter if we're going sideways. It doesn't matter if we're going up. It doesn't matter if we're going down. Because that scalper knows that over a series of, let's say, 100 trades, that it's going to provide an opportunity to be profitable at a win rate of, let's say, 60% or 62% or 72% based on your backtesting, based on your history, based on your take profits, right? So yes, of course, over a block of 100 trades, you're going to lose maybe 30, 40 trades, 20 trades, but it's going to be profitable 52% of the time, 58% of the time, 62, you know, the odds are going to be different, but it's going to be profitable, right? Because that's quote unquote your edge. So the point that I'm trying to make here is that if you are just wanting to be a mechanical scalper where you're going to look at your trading as far as a block or a series of trades, okay, and you're not going to really kind of focus on what's going on macro, right, which is weekly chart, daily chart, because it's too much analysis. You don't want to have a bias, because here's another thing too, guys. I'm a scalper, I'm a day trader, but I also analyze the chart on a macro, right? So macro wise, it does kind of give me a little bit of a bias. Like, hey, we've been trading over the 20-day moving average. We're over our 5 and 10-day moving average. Price action's bullish. I'm not really going to take part in the shorts because I'm looking for the bounces. Makes sense? But that can also get traders into trouble because you come in with a bias. Like right now, we are in a little bit of a tough spot because we're not really pressuring taking out, you know, all-time highs, and we're not really pressuring putting in any downwards momentum. So now my bias is in between. You know, I don't really trust the shorts and I don't really trust the longs, right? So now it puts me in a predicament where I'm having a hard time trying to decipher, you know, which plays I really feel more confident in. That's fine. It does really, really well when we're in a trend. Again, that's why this strategy, even though yes, it's mechanical, doesn't matter if the market's going up or down. It is a short-term intraday change in trend strategy. So you need a trend to hold. If there's no trend in the overall market, macro-wise, it's going to make the charts intraday trends a little bit harder to trust, which turns into the point that I'm trying to make here. And I know this is getting a little long-winded, but the point that I'm trying to make is that if you focus on just trading the 20 SMA plays as a scalp, and that's all it is, you have to really dial in a take profit that's going to be profitable in even the most choppiest of environments, okay? Sometimes that's half the range, sometimes that's half the ATR. Yes, it's smaller profits, but it's going to kind of eliminate you getting stopped out or losing on environments where it is choppy and where the market is macro wise going through distribution. I hope that kind of makes sense. So in that particular case, if we're not focusing on macro and focusing on what's going on the overall daily, then the first 20 SMA play, again, I know Nate kind of made a joke about it. I made a joke about it this morning. 53 point fucking range, right? That's a tremendous range off the open. I didn't take it, to be honest. It's just too much range. I didn't want to be whipsawed, right? And it worked out. It worked out for a scalp. If someone got into this trade below on the confirmation of 18,716, it went all the way down to 18,000, or excuse me, it went from a price of 18,716 down to a price of 18,697. So it gave you 20 points. So if you are that scalper who's looking for 5 points, who's looking for 10 points, who's looking for 15 points, then you made money on this trade, right? Now, if you're that one-to-one trader where you're going to let this ride, it puts you in a little bit of a 5, 10, 15, 20, 25, 30, 35 minutes. It puts you in about a 30-minute hamster wheel and spun you around as fast as it can. Right? It puts you on a fucking merry-go-round for 35 minutes before it started to finally slow down. Okay? So those emotions as a trader are very, very hard to deal with. Okay? They're very, very hard to deal with. The only thing, and I know I stress this a lot, the only thing that helps is position sizing. Again, the numbers look great when we play mini contracts. They look horrible when we're wrong and we're playing oversized, right? It looks, you know, it looks like we're not really doing anything when we're trading 2 micro contracts and taking 10, 15 points. But when we're in 5 micro contracts and we're sitting in a position that's going against us almost 40 points, it feels like shit, right? So those are things as a trader you have to come to terms with as far as what feels okay with you. You know, I like to tell traders this, and I was told a long time ago when I was trading options and stocks, put yourself in a scenario where if the worst possible thing happened, you're not going to feel anything, right? So the worst possible thing that could have happened to us on this opening 5-minute 20 SMA play was it literally reverses the next candle and goes against us 50 points. Okay. That's the worst thing that could have happened, because at that point in time, we would have had to have exited the trade because obviously we just got trapped. Correct? I think everyone can agree on that. So if that's the worst possible scenario, then put yourself in a situation where if the worst possible scenario happened, you walk out of this on 2 feet. You walk out of this with a clear head. Is that one micro contract? That's $100 loss. Now, if you can't, there's an active 20 SMA play long, guys, just in case. If you guys don't feel okay with walking away with $100 loss, then you know what you do? You don't do anything. Okay? You don't take the trade at all. And you have to completely wait for the next trade. Okay? Which is very hard to do. Because if the next trade doesn't come for 2 hours or 3 hours, whatever the case may be, almost 2-3 hours, can you sit out of not taking this bounce? I didn't. I took the bounce and I got smoked. Can you sit out of not taking the next low of day? I didn't. I took it for a little bit. Can you sit out of this big's bottom? I didn't. Got smoked again. So what I'm saying is that you have to come to terms with, if you're playing, 1 or 2 different entry models, okay? And I think what gets traders a lot is they see these 20 SMA plays, they see them work more times than not. They see them work, not work sometimes, right? But the risk to reward on taking these 20 plays pays off a little bit more than it doesn't. Okay. Now that's one entry model. That's one system. If you start combining that with taking a bounce, playing a rejection, taking another trade later on in the day, maybe when you don't really trade through lunch hour and there's a trade on lunch hour, when you start combining other entry models into your system, your probabilities start to thin out. Okay. We can keep track of we can back test this week how many first hour high and low breaks got confirmed and made money. That's a great entry model, right? We can use that a lot, because if we kind of look at the market here, we can see that once we confirm the first hour lows, it put in a very good trade, right? And I'm going to drop this line on these first hour lows. Where's these first hour lows at? Right here. Right here. So if we drop those first hour lows, and that's wrong, right here. So if we drop those first hour lows, we'll look at what happens once we break and confirm. It went from a price of 18,680 all the way down to 18,623. So we're talking about 40, 50, 60 points almost of downwards pressures. That's one entry model. That works. But if you combine the first hour lows with 20 SMAs, you combine them with these big bottoms here, or these mean reversions where it looks like the indecision candle is going to start bouncing, and you take a loss, now you're screwing up all of the other entry models, probabilities, and statistics. Make sense? So what you really need to do in your trading as a whole, you need to build a system of maybe 1 to 2 entry models per account. So if you're trading prop firms, maybe have a few accounts where you're only trading 20 SMA plays. Maybe have an account where you're looking for not taking any trades at all within the first 30 minutes, but really looking for that opening range break of that first hour, which is the first 30 minutes after the market, right? And then kind of taking 20 SMA plays with inside that same trend, whether it's down or up. And maybe you have an account where You're looking for more quick scalps where you're going to, watch the flushes and then try to get in on the bounces. Watch the bounces and then try to short the rejection spots back down with the trend, right? Because if you combine everything together, the statistics and the numbers are going to be very, very skewed. And you might win on one model and lose on another, and at the end of the day be spinning your wheels in the mud wondering what the hell just happened, right? So the point that I'm going to end with here is that if you are not going to kind of watch the macro, which is the daily and the weekly chart, to kind of operate your bias for the day, because I will always come in with a bias. So the point that I'm making is I will always kind of come in with the bias. Now, I'm never, oh, I'm 100% long today, I'm 100% short today. No, but I might be leaning 60, 70% long, leaning 60, 70% short based on what we're doing macro. That has saved my ass a million times, because let's say the macro's telling me we're long-sided bias, okay, and we get a big washout. Well, I tend to kind of let that washout go because I'm looking to catch that bottom. I'm looking to bounce. I'm looking for that 20 plate long. I'm looking for us to go red to green. Make sense? So that has saved me a lot of times from getting chopped up, trying to chase down, trying to chase up. Now, put a dash mark, right? So there's put a parentheses. If you're not going to trade that way, and you're going to simply treat this mechanically, where you don't care if it's going up or down, and you are going to run this over a series of 100 trades, let's say, right? If we could put a number on it, and you're going to take your losses, you're going to take your wins, you're going to take your scratch days, and at the end of 100 trades, you're going to live on that edge. So if the edge is hitting at 62%, you're going to take that 12% a month. Make sense? If that edge hit at 58%, you're going to take that additional 8%. You get what you kind of get what I'm saying? So there's going to be that little pocket there where you're going to take those profits and kind of compound those gains. If you're going to do that, right? If you're going to trade it mechanically, where you're going to look at a series of 100 trades and you're going to take that pocket of percentage that is providing you the edge, then you have to take this 20 place short, and your stop loss needs to be above that reason why, and you're looking for close to 50 points. Okay, now your second trade was here at 10:30, and if you notice, it does close right at the reason why. So whether you're giving it a little bit more room or you got stopped out, you have to take your medicine, right? Now, the next trade that's set up here is also a long for 26 points. It has not confirmed the 26 points yet. It's only went from a high price of 18,694 all the way up to a price of 18,706. Okay, so essentially 10 to 12 points on this one. This one prior went from 89 to 98, another 10 points there. So if you're going to take it mechanically, and you're going to take it like it doesn't regardless of the candle size, because that's you, like, I guess the bigger picture of what I'm trying to say is you can't dip your toes in the water and only take it sometimes. You can't dip your toes in the water and only play short. You can't dip your toes in the water and tell yourself, well, I'm looking for a 1-to-1 on this trade because it's 14 points, but I'm not looking for a 1-to-1 on this one because it's 50 points. Does that make sense? Because all you're doing is just spreading out your probabilities. Now, if you're going to just take the system mechanically and you're not looking for that full 1-to-1, but you're willing to risk a little bit more, so you're willing to risk maybe 2 or even 3 to make 1, then what I would personally do is find a sweet spot where you can have a take profit that is going to hit more than it's not. And regardless of how much this trade is going to move in your favor after you exit, be okay with it, because all you have to do is sit and wait for the next one. Make sense? So in this particular situation where you're going to give up 53 points here on this opening range candle, how about maybe we take 20, right? How about maybe we take 25, okay? So the ATR was here at 16 points. So how about we call an ace a spade, and we call it right in the middle, right? You know, between 15 and 25 points, let's say we take close to 20 points if we get it. Now the next 20 SMA play along, the range was 20 points. Let's go for 10. Let's cut it in half, right? What's the ATR? The ATR here was 23 points. So it was matching up almost perfectly with the range of this candle. But you can see we didn't get it. We didn't get it. It only went from high price of 18,689 to a price of 698. So it only went up 9-10 points, right? So you have to find that sweet spot that works more than it doesn't, okay? And that's the only piece of advice I need, like, you guys need to understand, because if sometimes we're looking for the one-to-one, sometimes we're going to take 10 points, take profit, sometimes we're going to play low of day, sometimes we're going to bounce because, oh, you know, looks like we found the floor here, so let's bounce. It's going to take one day where multiple models are failing, nothing's working, and your account's gone. Not only gone, but it puts you in a psychological state where you feel like nothing is working, right? Again, the major thing that I really had to overcome when I started looking for these 20 SMA plays, okay, years ago, was based off of the big chart, and I was noticing, you know, around the, you know, the 20, you know, we tend to have a nice series of candlesticks that tend to trend afterwards, right? And generally around the 20, there's a lot of room into the 50, a lot of room into the 200. So typically, you know, I didn't want a moving average that was moving very fast, right? Like I don't like the 5 to take trades, because what if the market's choppy? That thing's going up and over the 5. You know, the 9 EMA I've tinkered with a little bit, but again, if the market's choppy, it tends to go up and down over that 9 a lot, right? Come down to the 9, bounce, come down to the 9, bounce, come down to the 9, bounce. The 20 SMA is a big level on the daily chart. It'll be a big level on the 5-minute chart. That's how I've always looked at it. So I like those trends. You know, as stated before, look at the daily chart on the Nasdaq. Once we reclaimed the 20-day moving average, we've been on a 3-week run, right? 4-week run since the 3rd, or whatever the heck the date was. So the moving average is strongly weighted, right? Just like VWAP is strongly weighted, just like, you know, the 200 is strongly weighted, the 50 is strongly weighted. Everything else in between is minor pit stops and road bumps. That's it. Okay, so if you are taking these trades, you have to tell yourself, what is the overall game plan? Because if the overall game plan is to run a series, run a block of 100 trades, then what you want to see happen is you want to get through your losing trades as fast as possible. Because if you know that after 100 trades, you're going to win 65 of them, you should be profitable. Yes, if you operate the system correctly. But the thing is that most traders never get to 100 trades, 100 setups, because they're taking things in between. So not only are you taking 20 plays, you're taking bounces. Not only are you taking 20 plays, you're taking quick scalps on momentum. Not only are you taking 20 plays, you're taking high of day breaks. You see what I'm saying? So there should really only be one method of your madness, right? Now, I have 2, maybe 3 entry models that I use and bundle up into a package, okay? And again, I think everyone pretty much knows them. It's 20 SMA. It's looking for those mean reversion trades, so those reversals off of key areas of support, using low of day, high of day as a stop, and first hour opening range. Okay. Those are levels that I trade on the options and stocks side of things. Those are levels that I play on the future side of things. And I know that over a block of 100 trades, I'm going to be profitable. Because if not, I wouldn't be here, sitting here doing this. I'd be doing something else, right? You can't just continue to sit here and not be profitable month over month, year over year. So you have to find something that works for you, and you have to find the size and the dollar amount that is comfortable, that's going to work for you. So again, you know, the narrative is like this. If anyone took the last 20 SMA long, I hope that you're still in it. Now, you're not making any money on it, but if you're going to take the trade, they're not all going to work, and you have to sit through the pain. So that's the hardest thing to do as a trader, is to sit through the pain of the trade not going in your favor, the trade of going sideways, the possibility of a losing trade. Now it's a 26-point range, so that's a $50 loss per 1 micro contract. I would feel that everyone in here is probably okay with around $100 to $125 loss. That would put you somewhere around that 2 contract range. Okay. If you're trading any more than 2 contracts, then you have to think about the bigger potential loss. And again, if you are trading this trade and now it has broken back into profit, if let's say you take profit here, right? What's the price? You're up 5 points. You take profit here and this screams against you 20 points, you can't jump back into it. You can't even take a trade until you get a new setup altogether. Okay. So the model's going to work if you work the model. Now, if your if your game plan is 5 points, if your game plan is 10 points, then stick to that. You have to stick to that for the series of trades, for that entire block of trades. Because without it, you will never know the numbers. Like, you're never going to know what's your true win rate. You will never know what the edge provides you with returns. Once you know the number and you've done it long enough, you can then tinker with account size. You can then tinker with number of accounts traded to either increase that monthly P&L or decrease the monthly P&L if it's a down month. You see what I'm saying? So make sure you guys are staying disciplined is what I'm saying. Like that's a big key, is staying disciplined and having the patience, right? Because it's very easy for someone to say right here on this candlestick, let's go long, right? Like, we're breaking out here, I could still catch this 20 SMA play, let's kind of go long, and then it pulls back. Well, you're buying at the top. If it does pull back, you're buying at the top. And that doesn't mean that the 20 play was invalid. It would still be invalid for someone who was looking for a 1-to-1, but it wouldn't have maybe been invalid for someone who was looking to take 5 points, right? So the key at the end of the day is a slow and steady race. I know that gets said and beat through everyone's head, but it really is. I mean, it's especially if you're trading prop firms, the slower you can go, the better. The better. You know, the slower you can go, the better. This is a long process. This is an industry, this is a business where you can make a year's salary in a day, and you can lose your mortgage in a day. you know. So just like if you think about, you know, a lot of times people think because, right, because you can make a lot of money very, very quickly day trading, that getting a little confirmation here, because you can make a lot of money day trading, that the process is going to be a lot faster than someone who is, let's say, for example, investing for 20 years down the road in the S&P 500, right? Sure. The returns can be tremendous compared to someone who's investing, let's say, $500 a paycheck into the S&P 500, and they have a goal of a 20-year investment plan to retire on or some shit like that, right? You can make a lot more than that person doing that on a day by day, month by month basis, but you can also give it back just as quickly. So the whole goal, the whole idea between a long-term investor and a day trader slash scalper, whatever we want to call ourselves, right, is the same. It's long term. It's long term. But a lot of people don't see it that way because of, I can put a trade on right now with 5 mini contracts. This thing can go up 5 points and I can go out there and make $500. That's fast money, right? I can do that right now if I wanted to, right? I just got to be yes right on the long or yes right on the short. That's it. That's going to quadruple the returns of someone who's putting in $500 into the S&P 500. It's going to trump those returns. But the story goes, can you do that for the next 20 years? Because the person who's putting in $500 a month into the S&P 500 can continue to do that for 20 years. That's easy. They don't have to think about anything. It's automated. Comes right out of their check, goes right into there, right into that account. Right? Can you do that $500 trade every day for the next 20 years? So trading, even though it's fast income, even though the amount of money that you can make is exponential, it has to be treated the same way a long-term investor treats that account. We're not worried about today. We're not worried about this week. We're worried about the next 20 years. Now, again, everyone's age is different. Someone could be 75 years old and say, well, maybe I don't have 20 years, right? Let's hope that we all live to be 199. But let's say we don't have 20 years. Okay, 5 years, 10 years, 15 years. Maybe someone's 50 years old and doesn't want to wait to 67 to, retire. Maybe they want to retire at 55. So you have a 5-year plan. That 5-year plan needs to be implemented in a way that's going to make you last another 5 years. Okay? It's not about what can I do in the next 60 days if I have 20 funded accounts and I make $1,000 a day times all 20 is going to be, $250,000 payout, and sustainable. Sustainable. Now, it might happen where someone funds 20 accounts and they get that 1 month where they can take a payout of $2,000 times 20 accounts. So nice $40,000 month, right? Some people's yearly salary. It's some people's half the year salary. It's some people's quarterly salary. That's great. It's perfect. It can happen. So can someone winning, the lottery. That can also happen, right? So if that happens to you, let's say you're one of the lucky few who has 20 accounts and takes a $40,000 payout this month, can you do that next month? And can you do that the month after? Better question is, what is it going to take for you as a trader to make $2,000 a month x 20, right? Let's not worry about the 40,000. What is it going to take you to make $2,000? Is that trading 2 mini contracts 10 times a day? Is that trading one mini contract 9 trades in a row? Is that trading every day? Is that trading overnight, pre-market, New York open, New York lunch? Is that, what does that look like for you? What does making $2,000 look like for you? Because if you can make $2,000, you can make $10,000. If you can make $2,000, you can make $20,000. If you make $2,000, you can make $40,000 a month. But we got to get to 2,000 first. Makes sense? We have to be able to do the 2,000 in a way where it's sustainable at a level and pace that is not going to drive you nuts. Okay? So when you really think about it, $2,000 can be done very, very quickly, or it can take a little bit of time. I'm curious right now, it's the 30th of the month. Those of you guys who are trading prop firms or personal, doesn't matter. Regardless of how many accounts you've lost or how many accounts you have, how many of you, and you can reply in the chat, how many of you have made $2,000 this month? I'm not talking about collectively times 5 accounts, but how many of you made $2,000 this month trading? Funny money, demo account, prop firm evaluation, funded account. How many people have made $2,000 this month? Okay, so Elder's got it. Nate's got it. John's got it. Keeping it's a different story. Okay. You do not have it. Okay, that's fine. So again, I'm not putting a goal of $2,000, but it's a pretty obtainable goal of 2,000, right? Keeping it is always one story. The thing is this. Just like I mentioned, if you can make 2,000, you can make 10. If you can make 2, you can make 5. If you can make 2, you can make 20. If you can make 2, you can make 40. It all just takes having more money to do that. I've ran over that situation of having multiple accounts and how to 2 to 3% return. I've ran over that situation a million times. I don't need to do it again. But what I'm saying is that we really need to focus on what is that going to take for us to be able to make $2,000. Now, on the surface, $2,000, yes, it's not going to do a whole lot for you. It can. Okay, like again, everyone's financial situations are different, but $2,000 can definitely do a lot for you in terms of if you do have a 9 to 5. And it's an additional $2,000 a month. That can do a lot for you. $2,000 can do a lot if you're getting XYZ a month from disability or retirement or Social Security or something. That can do a lot for you, right? $1,500, $2,000 a month can do a lot for you if you're someone in college who's got financial aid and you work a part-time job at Starbucks. $1,500 a month can do a lot for you, right? Let's say you have a great 9 to 5 and you make over 6 figures. Okay, you make over six figures. Maybe, yeah, $2,000 on the surface level doesn't seem like a lot, but it can start to add up to where now you can have a little more, a little less stress, right? So $2,000 is great, is a great number to shoot for. And if you can make $2,000, you should probably start thinking about toning it back until you have multiple accounts, right? Like, let's say, for example, someone's got one funded account, right? And you make $2,000. Great, great. Don't push it, keep it, continue that. Work on a second funded account, right? Work on obtaining that next one, because now that 2,000 is now 4,000, and we changed nothing in our strategy. We changed nothing in our psychology. We changed nothing in our risk management. That's where it needs to be. Changing nothing in the way we do things, but making more money. Okay? We don't want to have to change everything we're doing to go from $2,000 to $10,000 a month. We want to change nothing emotionally. Because the moment you change things emotionally, bigger size, trading more, that is what hurts the trader. We have to keep it at a level of being able to do something. Remember, going back to the story between the long-term investor, 25 years in the S&P 500, and the day trader, we have to do something like that guy who's investing $500 a month into the S&P 500 for the next 25 years. We have to do something like that. What is that? You may be thinking, something easy, something obtainable, something that's not going to have any weight off of our shoulder, or not put any weight off of our shoulders and take weight off of our shoulders, right? Because if we can get to that point, and to be honest, it's basically doing around $100 a day, right? That's the number. If you want to be frank, it's averaging $100 a day. Okay. Let me ask another question. Is anyone over $100 today? Let's ask that one. Nate, Bob, that's close enough. 74 is close enough. Elder. So everyone who's in here and listening, 48, maybe you have one more trade, John, at $50. But if you don't get that next trade that you love, that you can manage, where it's not going to, take your 48 down to minus 500, then maybe you take it. If not, 48's fine. Because remember, it's an average. It's an average of $100 a day. John, you could make 200 tomorrow, making your average 120, 130, right? So again, the point that needs to be understood is that if you guys can do that, exactly what you're doing, for 22 some odd trading days, you're on pace for 2,000. You're on pace for 10,000. You're on pace for $20,000 a month. You're on pace for $40,000 a month. Changing nothing. Changing nothing, right? Now, I'm going to use John, and I'm going to use, I can't see the name, it's cut off. The $74 trade, or the $74 day and the $48 day. I'm going to use those numbers as examples, not using you guys as the example, but using those numbers as the example. You're going to have a trader out there somewhere in the space who's up $48 and says, oh, this is nothing, man. I should have made more money today. The market's going long. Boom. You get in, goes right against you down 200. Shit. Now what? Now what? Now I've got to trade more. Now I've got to get it. I just got to go back to break even. I've just got to really go back to break even now. Next trade goes in your favor a little bit, starts coming down. You panic because you don't want to hit stop loss. You take yourself out of the trade, and that trade goes. That trade would have got you back to break even, but you panicked. Emotional trading. We can't do that. We can't get in that situation where we have those feelings. All this stuff is a lot easier said than done. I'm not by any means raising my hand here and saying that I'm the most perfect at managing this. I've just been doing it for a long time, and I'm tired of slamming my fucking head into the wall. I got tired of it. 2.5, 3 years. I was, again, some of you newer people don't maybe know, my backstory, where I came from. I owned a business prior to coming into trading. I ran it for 5-6 years. I sold that business. I was luckily enough, at the time, smart enough to invest in 2 real estate properties. One of them is a rental, and the other one is currently the one that I live in. I came into this with a little bit of a nest egg. Okay, not a lot. I'm not saying that I came in here with millions and millions of dollars. I did not. But I had a nest egg that was going to be able to sustain my life and quality of living for 3 years. I had 3 years to figure something out before I went back to working for the man. Okay. During that time, there was a portion of 18 months where I lost $52,000 when I first started trading. Okay. 18 months, $52,000. I was tired of running my head into the fucking wall. I had to figure out, what am I doing wrong and where can I make an adjustment? Do I just not know how to trade? Is it just a strategy? What is it? Is it the markets? Is it what's going on here? This is a scam? What's going on here, right? And what it really boiled down to was, I was trying to compete with what I was doing prior to this. If I was making X amount of dollars doing this, and I have X amount of dollars in trading, I should be able to do a lot more than what I was doing prior, right? A lot faster, a lot easier. And that wasn't the case. Always trying to compare my income to what I did prior, my income to what I made last year on a day in and day out basis. Drove me nuts. Wasn't going to happen. I had to start very small and build up the skills to even be allowed to make that amount of money. Right? Like I said, everyone's situations are different. Some of us are retired. Some of us are close to retirement. Some of us work part-time. Some of us work full-time. Some of us have a couple of gigs. Some of us have a great career in a 9-to-5 that are doing this for maybe a means to the end one day when we do retire, right? So everyone's situation is different, but the result and the outcome that everyone is trying to achieve is the same. Okay. If all of you guys could replace whatever income you're bringing on a yearly basis right now with doing this for a couple hours a day, and that was guaranteed. Okay. That's the key. I want this to really ring home with you guys. Guaranteed. If you could trade for 2 to 3 hours a day, we can answer this question too. If you could trade for 2 to 3 hours a day, and they told you, who's they? I don't know. If they told you for the next 25 years of your life, what you are making now at your current 9-to-5, or how you're able to, look at all of you guys are waking up every morning. You guys are here trading. So I'm assuming you guys are eating every day. I'm assuming you guys, or maybe you're not, but you're here, you're living. I'm assuming you guys have a source of some type of roof over your head. I'm assuming that you guys have a source of income, however you get it, however much it is. The point that I'm making is you guys are showing up every day here. So you guys are obviously living right now. So if someone told you for the next 25 years that you could trade for 2 to 3 hours a day and make the same as what you're bringing in on a yearly basis, if not a little more, let's go 25% more. Let's go 25% more of what you're making right now on a yearly basis. If that was guaranteed to you for the next 25 years, would you leave your job and whatever you're doing to do this full time? To work 2 to 3 hours a day, and the money was guaranteed for the next 25 years. Think about the time you could spend with your family. Think about the time you could spend with yourself. Think about the things that you can do, the places that you can go, the amount of time. Again, freedom of time is a lot more important than going to bust your ass for 10 to 12 hours a day, right? 15 hours a day. Okay, having time. We all know that time is not guaranteed, right? Time is something that you cannot get back. So if you can't get that back, what would you do with the remaining time you have left? And I'm sure for a lot of us, it would not be going to the cubicle, going to the office, going to the warehouse, going to wherever we went or go for 10, 12 hours a day just to make ends meet, right? So the point is that in this business of trading, nothing is guaranteed, which is why it makes it so emotionally and psychologically hard, because we know that today we can make 5,000 or we can lose 10,000. We know that today we can, make 500 or lose our funded account or lose our evaluation account. Nothing is guaranteed. So what we have to do is put yourself in the Warren Buffett, right, mindset. The guy who's investing in the indexes for 25 years. The guy who's plugging money away, who worked 40 years in the steel mill investing in his 401k. You have to think like that as a trader. And what that means is you have to do something that is consistent and easy, that your mind and physical and mental skills when it comes to trading can handle. Okay? And again, $48 a day, the $75 a day, the $100 a day is easy. Those are easy numbers. I had someone in here one time who came in, they scheduled a one-on-one coaching call with me. And the first question I asked them was, how much realistic expectation in dollars do you like to or would like to try to achieve as a trader? And this person told me, well, I do XYZ and I have this trade and I make $150,000 a year, something they were saying. So I would need to make, $700 a day. I need to make $700 a day. And the first thing that I told them was, you better find something else to do. Because have you done the math on what $700 a day looks like? And they said, well, no. Getting a nice pop here off this 20 SMA, guys. Current 20 play is still in play. So someone should have still been in this for almost, what is this, an hour? You've been sitting in this for an hour. I've been ranting for an hour. You guys should have been sitting in it for an hour. That was finally a little bit of a pop there. I don't know if anyone actually took that play, but based on the rules, based on the system, never took you out, should have been in it. The point is that when they said that they wanted to make $700 a day, right? Because if I can remember this, they're no longer here. I mean, I'm not saying like that literally, but they're not in this room, right? I don't know what happened to them. It was a good guy, good dude, but he just stopped showing up one day, and I can only assume why he stopped showing up. Because at the end of the day, guys, this business is very, very hard. But anyways, $700 a day times 22 some odd trading days a month is around $15,000, $16,000 a month. Okay. So the number that he had in his head was correct as far as, well, I make $150,000 a year, right? And if I can do $15,000 a month times 12 months is $180,000. So not only am I making what I make now, but I'm also replacing that and adding around 20% a month or a year to my bottom line. Perfect. That sounds like a great plan. But when you think about it, I said, well, how many accounts do you have? He says, well, I got one funded account that's $100,000. It should be obtainable. I said, so literally you're trying to double a $100,000 account on a $3,000 or $4,000 drawdown. So realistically, you're trying to make $180,000 off a $3,000 to $4,000 account. Does that make sense? That does not make sense. Well, I have a $100,000 funded account, so I don't have 4,000. I have 100,000. I said, no, you have 4,000. You just have margin and you have leverage up to quote unquote 100,000, right? So does that make sense? Well, yesterday I made 900. It was something along those lines. I said, that's fantastic, but that's not going to be every day. And the moral of the story is 2 or 3 days later, he said he had a little bit of a hiccup. He blew up that account. He bought 3 more accounts and he was going to trade smaller. That worked for about a week. And then I got another message. Well, I lost these other accounts, but I can't trade small because I don't do well with that. My personality, I need to be in and out fast. And I'm trading the 1 minute time frame. I said, okay, 1 minute time frame's fast. It's going to lower the risk down on heavier size, but it's going to be fast. And the narrative repeated itself. Well, you know what? I am on the 30-second time frame chart. 30 seconds now. This is a true story. And it got to a point where I started to understand that it's not the system, it's not the strategy, it's the emotional pressure that one puts on themselves to try to figure something out. So this trader was not in business long enough to even see the plan through. If he could make, $1,000 a month, $2,000 a month, $3,000 a month, he would have a great day where he would make like $4,000, right? On an evaluation account, and close to passing or getting it passed, and the next day it was gone. Like the next day it was gone. So that only works for one time. Like we can all, like I just mentioned earlier, we can all go out here and put on 10 contracts and make $1,000. That doesn't mean that our next 2, 3, 4 trades are going to do the same. There's no guarantee of that at all. So we have to do numbers that make sense. It makes sense. Like if you really want to make, right? If you really want to make, what's the minimum payout? What's the minimum payout for Apex? $1,500, or I know it's $500, but realistically, we're not going to take out $500, right? So 4K a month. That's what we can take out, right? 2 and 2. So let's just cut that in half. Let's cut that in half. Let's say that we're working on we get paid once a month type of deal, right? Let's just say that instead of trying to shoot for making $2,000 this pay period, $2,000 next pay period, how about we just make $2,000 a month, right? Let's just make that $2,000 a month. And let's do that. Let's do that and have a cushion to where we can take out the 2,000 and still have a cushion, for drawdown, this, that, and the other. And then we just go do that times 10 times. I'm not even gonna say 10 accounts. Let's do that times another 5. Let's have 5 total. That's a $10,000 a month. That's $120,000 a year. That's life-changing money for a lot of people. That's comfortable money for a lot of people. And that's averaging between what you guys average a day. So if you think about it, if we just shoot for making $2,000, I know a lot of us are going out there and we're getting multiple accounts. That's fine. You're trading multiple evals. That's fine. But 20 play is looking good here. That the thing is that if we can't do a $2,000 payout or make $2,000 in a month on one account, why are we stressing ourselves out over 10? I mean, you have to prove, like, I'm almost, you know what? Like, I'm almost a bigger fan of proving the model once and then scaling it. Okay, because I do come from a business background. I come from a sales background. I come from a distribution background, right? We have to prove the business model once that it works, and then we scale. So I had product in one local mom and pop store, moved to online distribution, moved to a few local mom and pop stores. From there, I proved that the business model worked, proved what SKUs sold, and then expanded. And how do you expand? More salespeople, more sales reps, calling, making the phone calls, getting these samples into other stores, and eventually scaling, right? I don't want to put 100 units in one store. I want to put 100 units in 1,000 fucking stores. Does that make sense? So the same thing, but we got to prove the model works. We can't just set up shop and say, well, I want 10 funded accounts, I want 20 accounts, I'm going to go trade all of these accounts before you've even taken one payout, when you don't have the infrastructure built. What does it take to make $2,000 a month? What does that take on your part? How much trading does it actually take? How many trades does it actually take? How much size does it actually take? How much time did it actually take? What are the numbers, right? I should be able to ask someone, what are the numbers? If you don't know the numbers, how can you go out there and try to make $5, $10, $15, $20,000 a month on 20 accounts? You don't have the infrastructure built yet. It's just like this bullshit they want to do in California, where no more gas cars, right? Again, I'm going to go off on a tightrope here, but no more gas cars by this year, that year. Do you know how fucking nuts it is right now to charge your electric vehicle? God forbid it's not a Tesla, right? God forbid it's not a Tesla. These things take 3 to 4 hours to charge. You better have the thing set up in your house. That takes all night, right? You know, I know, I know a lot of people with these Teslas, and it's every single day it's something else, you know. And I wanted one to pay back towards Mr. Elon, because he's made me so much money on the stock day trading this thing over the years, and I really wanted to buy one just to have one, but I don't want one anymore because it's so hard to find a charging station, and when you do, you gotta wait, and then when you're waiting, these people are like jerk offs. They don't leave it like right on time. It's a fucking shit show. Half the time you're going, there's a couple pumps are down. It doesn't make any sense, right? So what I'm saying is, we don't have the infrastructure ready for that. Could you imagine if every car on the road was an electric vehicle, and every dork is sitting here on the corner waiting 2 hours to charge these things? God forbid it's not a Tesla at the superstation. Like, it doesn't make any sense. Doesn't make any sense yet, right? So it's like they're pushing an agenda that's not ready yet. It's not ready yet. And that's the same thing. It's the same thing. Yeah, if you can't charge at home, it's guys, this 20 play is beautiful. I don't know if anyone was in it. But what is the thing here? High price of 18,694 on the last one, and we're trading at 716. So we're up, you know, close to 20 points. It's a good play. But you know, again, I'll throw out different life situations, different analogies. Guys, this is a really good play here. I don't know if anyone's in that. It's a really good play. I mean, let's call it ace a spade. This thing took a fucking hour to go, right? Jesus Christ, right? I mean, I've been sitting here japping my jaws for an hour, and it finally went, right? It finally went. I mean, I'm not in the play. Call it a day, but it was a nice play. But I mean, again, I mean, at any worst time, we were down. What is this? 95, 78. We were down almost 15 points on this play. So at one point in time, you know, within this last hour, we we're down 15 points, 16 points, 10 points, 12 points, 15 points, you know, up and down, up and down, up and down. This thing here, right, if not sized accordingly, like let's say someone with two mini contracts, right, down 15 points, you're down $600. Were you sitting through that down $600 on two mini contracts? That's what I want you guys to focus on. Can you stomach that? Because if this didn't work, you were going to lose a lot more than $600 on two minis. You're going to lose a lot more than $300 on one mini contract. Can you sit through that Or, Nate, how many contracts should we have taken on this 26-point risk candle out of 1-to-1 based on this, what you're tracking? What would that have called for? 2 cons? Right? $50 a risk, $50 risk per con. So we do 2 cons. Okay, so we're up 80, 100 bucks, right? We're up 80 to 100 bucks on that play. Took an hour to make it, but hell, how many places out there are paying 80 to $100 an hour? You know, unless you have a very good trade or a very high level skill, there's not a lot of places that are paying 80 to $100 an hour, you know? Well, it sucked, you know, I had to sit through drawdown, this, that, and the other. Yeah, well, so does any job. Any job sucks sitting there through an hour, right? If you don't love what you do, it sucks sitting there. It sucks sitting there. It sucks, you know, doing whatever that is that you do for an hour to make 20 bucks or 30 bucks or 15 bucks an hour, whatever the heck people make out there, right? So it is what it is. That's how you have to approach it. And that's how you have to look at it. The whole goal here is to stay super tunnel visioned, like super tunnel visioned on the process, super tunnel visioned on the risk, super tunnel visioned on letting the damn trade play out, super tunnel vision on not getting too excited and sizing too big, and super tunnel visioned on the process. One account, what does it take to make the $2,000 over the next 30 days? If you can do that, you can do $40,000 a month. The opportunities are endless. We have to build the infrastructure for the one. We can't go any higher than that unless we've done it once. It's just like if I showed up, you know, I want to learn how to be a carpenter, okay? And I show up to a guy who's been doing carpentry for the last 25 years. He's the best in town, and he's doing a full kitchen remodel, doing custom cabinets. And he tells me, okay, I'm going to be off for a week. When I come back, I need you to demo everything, and I need you to get the framework laid out and the design. I wouldn't know what the hell to do. I can demo the shit, I'll tell you that much right now. I'll rip everything out, but I wouldn't know where to start. Right? And a lot of times we go from looking at one thing and just looking at the end result. The end result is always what's going to get you. The end result is always going to get you, because that end result is, I know I can make 10,000. I know I can make 5,000 this month. I know I can make 3,000 this month. But how are we going to get there, bud? You know, how are we going to get there? What is it going to take? How much stress is it going to take? How much time is it going to take? How much contracts do we need to trade? What's our risk on a daily basis? And when we do hit that risk on a daily basis, if we do go into a 2, 3, 4, 5 day losing slump, are we going to come out of it in 20 trades? Are we going to come out of it in 50 trades? Are we going to come out of it in 100 trades? How many trades is it going to take for us to come out of it using the same risk model? Right? So unless you have those answers, if you're just coming in every day and you're just saying, well, you know, if the market's hot today and it gives me a good setup, I can make some money. Well, that's great. You know, you're gonna get, you know, a solid 8 to 12 days a month where price is gonna be great. What about the other 8 days? What about the other 10 days? What are we gonna do then? You know, and when we split those hairs at the end of the day, are we gonna be profitable? And if we are, how much is it? You know, I talked to a guy one time. He's a trader. He makes very good money, but he doesn't even analyze his P&L on a day-by-day basis, on a week-by-week basis, on a month basis. He does quarters. We could have a bad quarter, guys, where your model is not working. Your strat, like these 20 SMA plays can go into a slump for 30 days. You know that? They can go into a slump for a whole market cycle. Like, if we were to really go into distribution, right? If we were to really go into distribution where the market starts consolidating for 30, 60, 90 days, right? Which is about a quarter. If the market was truly in a tight range, contracting for something, the next move, you're going to have 2 or 3 months where you're going to get chopped to absolute pieces. You're going to get chopped to absolute pieces. But again, that's 1 quarter out of the year. 1 quarter. You can have another quarter where you make 100% returns, because everything is just perfect, right? And if you think about it, even if you made in 3 months, even if you made $2,000 a month times, again, I like to throw out different numbers because I always like to think about it. Let's say you had 3 accounts, right? You have 3 accounts, you make $2,000 a month times 3 accounts, that's $6,000 a month, and you don't even take a payout for 3 months. That's $18,000 a quarter. You know, you're still on pace for pushing $65, $75, $72,000 a year, right? Even if it took you 3 months. Even if it took you 3 months to make $2,000. Think about that situation. Like, have you guys even ran those numbers and scenarios in your head? What if it took you 3 months to make $2,000 to get that payout? That's one account. Imagine if you had 10 of them. That's $20,000 a quarter. You're still on pace for 60 to 70 grand a year, right? An extra 60 to 75 a year, 3 months to make 2 grand. I'm willing to bet my account size, not literally. I'm willing to bet my personal account that each and every single one of you guys, with the right rules, the right discipline, and following the model, can make $2,000 in the next 3 months. I know that's not life-changing money. If you made $2,000 in the next 3 months, I get it. But from there, you can scale that every 3 months. So imagine if you had, like, we got guys right now pushing 20 accounts, right? Let's call it how it is. We got Burks out there with close to 20 accounts. We got Shifting Gears with like 10 accounts. You know, we have Nate's up there with a shit ton of accounts. Think about it. $2,000, 3 months times 20 accounts. Jesus. Jesus. Sure, you're not getting a payout every week. Sure, you're not getting a payout every month. But could you wait 3 months? Could you wait 3 months for a $20,000 check? Could you wait 3 months for a $40,000 check? 3 months. You know, I mean, really break that down. In the beginning, when I had a certain amount of money in my account, I had a long time where I didn't touch any of the gains, right? Because again, remember, I came into this with, you know, my bills and finances planned for at least the next 3 years, right? Like I had other smaller like income coming in, but it was just like supplemental income from different things that I was doing. And I could float myself for 3 years. So I didn't have any intentions of taking a payout this week or next week or whatever. And that's the thing with personal accounts, guys. We can make a big trade and we can go withdraw it like right away. Like it just, be in the bank, within 48 hours. I mean, some of these brokers, you can have a debit card linked up to it. You can just use the balance that's in the damn account, right? So with that being said, you have to grow the account, right? You have to stack it up. So there's a lot of people, I mean, especially when like all of like, especially during the pandemic, right? When everyone was making money. I mean, the taxi driver was making money. The guy down at the deli was making money. Your next door neighbor was talking to you about Dogecoin. You had people, you had your aunt and uncle, at Thanksgiving asking you about, what's the stock market doing? When during that time, you had people who were taking, you know, uh, small accounts, but like really building them up 20,000, 40,000, 50,000, 100,000. I mean, we can ask Biggs. He's busy in the summertime, but like me and him, we traded a lot during that time. And I mean, that guy went up hundreds of thousands of dollars. hundreds of thousands of dollars. You know, gave a lot of it back, which, you know, he'll admit, you know, gave a lot of it back. But the thing is that you're not going to really grow an account if you're constantly worried about taking it out, right? Like a lot of traders, especially on this prop firm craze, this prop firm wave that is, you know, taking over right now. A lot of people are very concerned about how much can I make in the next 2 weeks or this month to take it out. What are you going to do when you take it out? You're done. You're back down starting at nothing. You know, the smartest thing to do, would be whatever you can to make as much money outside of trading, whether that's a 9 to 5, whether that's picking up a second job, whether that's, you know, selling crap on eBay, whether that's, you know, doing whatever, you know, helping the old lady down the street throw out her trash every Tuesday, whatever that may be. But keeping money coming in and just focusing on the process for that 3-month goal. What's that 3-month goal? If I can take 3 months and pass 10 evaluations and have 10 funded accounts, and I take the next 3 months and I make $2,000 over 3 months, right? Over 3 months. So $2,000 is, whoops. $33 a day. Okay, $33 a day. If I can make $33 a day for the next 60 days, that's 3 trading months. I mean, think about that, guys. Can you pass an evaluation in 3 months? I mean, I'm really trying to set everyone up for success here. You know, I really want you to think about it in a way that is going to be obtainable, right? Because if you have 20, 22 some odd trading days in a month, right? 3 months is going to put you at around 60 trading days. $33 times 60 trading days is around $19.80, right? So that's $2,000. There's your fucking payout, right? There's your payout. So if you really treated this as a business, like think about this. I think about this all the time, right? I think about this all the time. I can take money and I can go start up a business, right? I have a lot of ideas for starting up other businesses outside, non-related to trading at all, right? Like a lot of businesses. And I've started a few businesses. It takes a long fucking time and a lot of fucking money before you start generating revenue. It's a lot of money in, it's a lot of work, it's a lot of late nights, it's a lot of hours before anything starts rolling in, let alone breaking profit. Like, let alone breaking profit, right? But if you can take a 6-month plan, 6 months passes like this, guys, we're in the 5th year of this month already. The 5th year, or 5th month of this year. The 5th month of this year. We are half a year down. Half a year down already. It's gonna fly by like fucking like flies on shit, right? Think about it. It's gonna go. Like I said, as long as you guys are able to wake up every day and get up out of bed, and hell, maybe you don't even have to get up out of bed. As long as you're waking up every day, time's going to pass. Time's going to pass. So focus on the process. Again, I'm not saying, hey guys, make $33 and stop. I'm not saying that, right? I'm not saying that. Like, the opportunities are there to make money, put your foot on the gas and make money. But what I'm saying is, ultimately, when you guys are sitting on a $20 day, $30 day, $40 day, and it's like, well, what the fuck? Just relax. Because take that approach, right? Take that approach. This is a business. This is a business. So you have to run your business accordingly. Like, you're not going to be able to start a business and go out there the first, 30 days and turn six figures. Maybe you can, but that's like you're catching a good wave and a good market at a right time or whatever. But it costs money, right? It costs money. It's going to cost time. It's going to cost a lot of, a lot of things, a lot of things. Have a good one, Elder. Have a good one, buddy. So at the end of the day, if you if you guys really sit down and make that business plan, I mean, make a solid business plan, create an outline, and don't put a short-term time constraint on yourself. This is going to take a while. Remember the guy who's putting in $500 a month into the S&P 500 for 25 years. We all know someone like that. You all know someone like that, or if you don't know someone like that, you've heard of someone like that. Someone who, puts in X amount of percentage a month into a 401k, and when they're finally retired, great, they got maybe $1 million in there, great. But the way that this fucking economy is going, the way that this Fed is running things, it's sad to say, but a lot of people are gonna retire one day with nothing in that damn 401k, and that's a fucking fact, right? But that's another story for another day. The thing is that if you take that approach, you can do the same thing in less than half the amount of time. Like, really less the amount of time. If you get over the hump of trying to make it right now. Stop trying to make it all right now. Right? Stop trying to make it all right now. 3 months, work on 10 evaluations. Here's a business model. Okay. Everything has to be treated as a business. Everything has to be in a business plan. Okay. I'm going to buy 10 evaluations. I'm going to trade the next 3 months and try to pass 10 evaluations. I'll copy trade them. I don't care. Whatever. Let's copy trade 10 accounts, right? Let's tell ourselves that. Let's copy trade 10 accounts. I know that any stress I feel and I'm over $33 a day, I need to just stop. Okay. Any up $300 and then I'm back down to $50 on the day, I need to just stop. Because why? My business plan tells me that if I can do $33 a day for 3 months, I'm going to, pass these evaluation accounts. Right? Once you pass these evaluation accounts, I'm not saying to hit $33 a day and stop, but what you guys get this, what I'm trying to say. Take 3 months instead of the one. Well, I'm going to get rebuild. I'm going to get build in a week, right? There's a big one. I'm going to get build next week, so I got to really push it this week. You don't have to do shit. Pay the extra $30 and get it again for another month. So it takes you 2 months. So it takes you 3 months. Who cares? You're $100 in a contract or $100 in an account for 3 months. It's nothing. It's nothing. So 10 accounts. A goal, right? Goals are meant to be broken. A goal of pass in 90 days, which is 3 months. It's a goal. So goals are meant to be broken. But I'm just saying, take the pressure off. Tell yourself you have 3 months to pass 10 evaluation accounts. That doesn't mean trade them all separate. Trade them in groups of 5. You want to trade 5, trade 5. You want to trade 10, trade all 10. Doesn't matter. But try to pass 10 within the next 3 months. And then take the next 3 months and make another 2,000. Get that payout. That's a $20,000 payout in the next 6 months. In the next 6 months, you could be looking at a $20,000 deposit. And in another 3 months, you could be looking at another $20,000 deposit. You can do that 4 times a year. That's $80,000 on 10 accounts. $80,000 over the next 12 months with that simple plan of not putting the time constraint on yourself, not pushing it. And that 20 play, I think, hit it at 1-to-1, right? That hit at a 1-to-1 a while ago. 18,694. Yeah, I hit at a 1-to-1. So there it is. There it is. There's been 2 setups today. One that hit at a 1-to-1 for 53 points, and another one that hit at 26 points. There was one here that I could see someone getting stopped out on. But again, yeah, little tricky here. But it is what it is. That's today's lesson. Again, guys, for some of you guys who are new, right? Some of you guys who are new, I'm not going to sit here all day and say, hey guys, go long on the Nasdaq, 18,720, take profits here, take profit. That's ridiculous. If you don't know how to read price, you don't even need to. Just follow the 20 SMA plan. What does it say? What does it say to do? What does the strategy say to do? It's so simple, right? It's so simple. Because that's not what trading is. It's not the strategy, right? It's not the strategy. Like I'm gonna drop a fib here. I'm gonna drop a fib. Right? It doesn't matter the strategy. Let's just drop a fib. Let's drop a fib. High to low. All right. So 50% bounce here. 61.8% retracement, right? What are we gonna do? What are we gonna do about it? Like, think about it. High to low here. There's your fibs. That's no strategy at all. It's just dropping fibs, right? From take the high, take the low. Where's the potential bounce spot? If you clear that, where are you going there? Where are you going there? So forth and so forth, right? So if you look at it from a high to low, we're at a 50% retracement, right? 61.8. Isn't that sweet spot, right? Isn't that the sweet spot? You can see we're getting, I mean, rejected to a T at the 61.8 retracement. So it has nothing to do with strategy, guys. It has nothing to do with strategy, right? If you're in the 20 play, where should you take profits at? Well, maybe at the 50%. Oh, I don't know. Maybe at the 61%. If it falls down the next level of support. So think about this on a 50 on the fibs. If you were to take the reason why candle on the last 20 SMA, that low price is sitting at 18,668. Okay, how about we just take, you can also say this, okay, if we drop below the 23.6 retracement at 18,662, which is sitting literally 6 points lower, then I need to get out of this trade, right? Because that's telling us that we could potentially come all the way back down to low of day. It's so simple. It's so simple. So just size yourself accordingly to where you can sit in the move. That's it. One contract. I don't care. Two contracts. Guys, you can make $30 a day. You can make $40 a day trading one fucking contract. I mean, one micro contract, $20 here, $20 there. There's your $40. In 3 months, there's your $2,000. Have 10 accounts. There's your $20,000. Done. And that's doing around what, $6,000 a month on average? If you wait the 3 months, like if you run a system like that, if that's the model, that's your game plan. That's an average of like $6.2 thousand a month. I just took it from the open. I just dropped this bullshit from the open. So, or actually, was it from pre-market, right? That pre-market high to the low of day. That's what I did. Pre-market high to the low of day. If I was to do, will I take this off now? If I was to do the high of day, right? If I do the high of day, just from the market open down to the low of day market open, market, then we're still at the 61.8. It's still the same thing. It doesn't really change much. It changes like 3 points from going from the pre-market high, or goes from the pre-market high to the actual New York open high. It changes like 3-4 points. So it wasn't really much. You do 10 evals at once or try to pass them. I mean, again, that's all on you. it again depends on the financial situation. I mean, what 10 evals at what are they costing right now? They're 90% off on Apex, or they're $29 on Top Step right now with that code that they're running. So let's say you'd be all in on 10 accounts for $300. You know, if that's not in the budget, then you can do 5 for 150, right? You know, if that's not in the budget, then maybe you do 3. You know, I don't know, but you just have to work it out to whatever's in the budget, right? Because again, remember, like, you're treating this as a business. So how much are you trying to invest in your business right now? You know, if that's $300, go get 10. If that's $150 into your business right now, go get 5. Right? If that's $100, you know, go get 3. You know? But like, Kurt, I'm just like just trying to throw out like just a general blanket of a business plan. You know, having 10 accounts would be nice, right? Like having 20 is great, right? Having 10 would be nice. Um, having 5 is also fine too, right? It doesn't really matter. But I mean, 10, that number kind of rings a bell to me. Like 5, 10, 20 rings a bell to me. So having 5 is great, having 10 is great, having 20, like, to me, that stands out. Um, but I mean, yeah, sure. You know, even if you had 5 of them and you made 2,000, that's $10,000 in 3 months. That's basically making around 3,250 a month, $3,200 a month in 3 months. If you take that horizon, right? Like, take that horizon, like, not trying to make $10,000 off 5 accounts in 30 days, but just tell yourself at the end of the quarter, right? When every quarter I'm going to take out $2,000 in account. You only need to average between $30 and $50 a day on that type of plan. Now, again, you're going to have days where you make 200, you're going to have days where you lose 100. But I'm just saying, the math, once the math works out, if you can average $30 to $50 a day, you're on pace for breaking 75K this year doing that. Doing that. It's always how I've thought about things too. It's always how I thought about things, because, you know, if you just go into it open, with no real plan, it's kind of like, shit, how much should I try to make today? You know, market's still open. I should be still trading. Nah. I learned that a long time ago. Like, okay, if I average this for 30 days, what does that add up to? It's just like you guys ever remember when you got your first job, right? Like when you got your first job, shit, I'm working 40 hours. When you got your first full-time job, right? Even part-time. But like, how many of you guys like sat there and you like added it up? Like, oh man, on my first check, I work 32 hours. I'm going to make X amount of money. I'm going to do this with it, right? Like, how many people did that? Like, a lot of people did, right? Like, when you had that first job, hell, even when you start a new job, shit, okay, they're going to pay me this much. How much am I going to make in this month? Right? That's the approach I'm taking with trading. And that's how I've always taken it with trading. If I can do X amount of dollars, that's low stress to me. You know, my first job years and years and years and years ago, when I was a teenager, I was in high school. My first job was 99 cents only store. Rest in peace. They're all closed down. I was on the remodel crew getting a store ready. And all I was thinking about was, man, 40 hours a week through summer here, how much am I gonna make? Right? I was adding it up. And it sucked, right? I did the bare minimum. I was like, okay, I'll put this rack up and I'll take my sweet ass time going to the back to pull a pallet out. Right? So that's the approach that I'm taking with trading. If I just, you know, half-ass it and take my sweet ass time, how much can I make in 3 months? How much can I make in a month? What a bounce here. What a bounce. If I drop that fib, I think we're coming up into that golden pocket. That golden pocket is going to be, where the fuck's the fib at? That golden pocket. Yeah, we're breaking over the 61.8 retracement. I'm just going to actually take it from the high of day New York. High of day New York to the low of day New York. Guys, we're getting real close into that 78.6 retracement. I mean, this is a fantastic spot to take profits. If anyone is still holding, this is a great spot.